are some very interesting suggestions advanced by the panel in the final part of this roundtable series, some of which you'll agree with and some of which you may not. But as you listen to your peers, ask yourself what you would do to address the current pain points being experienced by the life insurance sector with a view to delivering a brighter future.
With you, Ruth, and thank you very much for your patience. Perhaps we've covered a lot of territory before coming to you. Do you have any reflections on what you've heard so far? And following that, I know that there are certain views that you hold on issues that relate to the longevity of life insurance products.
Thanks. Yes, it's been extraordinary to hear all your pain point views. And I think, Danny, your points on collaboration, I cannot stress how important it is. For us at iExtend, we started with a blank page, so we didn't bring any legacy in. So, being in the industry for over 30 years, I had and obviously at the front end, Catherine, with the underwriting and the backer end at claims, it was something that we had to think deeply of and not throw away the rule book command either. So collaboration, and Catherine, you brought it up about the role of the advisor. We don't give advice. So the advisor to us is queen or king, and that is sacrosanct, their relationship with their client and the client's circumstances. So when we thought about that pain point and the process, because at iExtend we risk assess because we need to understand the risks we're taking on so we can sustainably pay premiums, for the medium and long term. So, but for the first point, I think, is actually understanding everybody in the process and starting with the advisor. Mark, you mentioned uncertainty of the policy being accepted, and that's a great point about why can't we ask 3 or 4 questions to provide certainty. So it's something that we built from thinking about that real pain point about how do you provide certainty, and that's the role of the beauty of digital and technology and building in that mechanism of expertise into your, say, rules engine, so you can provide that certainty. So our business is we invest to acquire life insurance policies for customers at an older age. So we were thinking straight away, wow, this is complex, because the gentleman or lady who took the policy out 20 years ago was in good health, but now 20 years on, at the point of cancellation, we're seeing those, and they are more complex. So we couldn't continue to do the traditional and have a 20-page application form or a 10-page. So we had to think about what the role of the advisor is, and the advisor knows best. So I liken it to I often talk to advisors on a scale of 1 to 5. How well do you know your client? And that has a huge impact on how we collaborate. And some advisors, they might be a new servicing advisor, and they may not have a detailed knowledge of their changed health circumstances. And some have a very deep knowledge. And it's really that collaboration starts at the very beginning. What does the advisor know? Or how can the advisor work with us up front, rather than us dictating through a big form. And so that 3 or 4 questions jumped out at me, Mark, about how could you do that? Why do we need so many signatures? Please ask me, when we haven't certainty. Why do we need to go through this big, heavy lifting process when we may not be able to offer cover? So those things are very important. So thinking them through and thinking them, back to your point, Danny, about design thinking, and that putting the human into this is very, very important, rather than the product. So really thinking about that has been very important. Catherine, you mentioned about field underwriting. I am absolutely passionate that the advisor and the distribution manager are enabled in the field. So it's not an expertise that sits in an office to be spoon-fed. It's actually the role of the advisor, and we as collaborators in that role need to do everything we can to educate ourselves on what we do and what we do best. Can I give you one example? Some of the cases we see, we can't offer cover because the person is in better health. They may have been actually in better health than when they took the policy out. They may have took the policy out with a loading for diabetes, and 20 years later it's actually really well controlled and they've lost weight, and those risks aren't there so much. So it's not a good thing for the advisor in that sense that we cannot acquire the policy. But what have we learned through that process is very, very important to pass back to the advisor, because there are options. We haven't talked too much about product, but there are legacy products and there are contemporary products, and they have different pricing structures. So in cases that come across my desk, if we can't offer cover, at least explain it in a proper way. We call it the soft decline. Explain it so that the advisor says, well, we couldn't get that across the line, but I'm able to rebroker that cover. So what I'm trying to say is working in a collaborative way and sharing that our expertise is really, really important for consumers, and understanding that clients' circumstances is not what we do. We're not at the coalface. So
okay, that's a brilliant summary. It occurs to me that in the notes that I've been making, in the conversations we've been having about pain points as they relate to the current status of the life insurance industry, what the future might look like, the points that everybody has made, I can summarise when I talk about enablement, simplicity, provider cooperation and collaboration, process simplification, trust and certainty. And if all these attributes were addressed, then the industry would be a much better place. That's the message in listening to what you've all had to say today that seems to be coming through. So in the interest of time, and with my apologies, there's always more that can be said. If we can go around the table, we're going to end with you, but if I can start off with you, Mark, and we'll go around.
Well, the two things, if we're trying to think outside the box, being innovative and where we could actually grow. For me, I've done a lot of work with people who are in their 50s and 60s, and their pain points, apart from retiring with enough money, is their adult children. And their adult children aren't getting insurance. They're losing the insurance on the super fund, and these adult parents, parents in their 50s and 60s, are happy to pay for that insurance. So things like trauma insurance, as Catherine was saying, and one of the worst things is to go to a funeral with someone in their 20s or 30s, and a lot of these people do not have cover because they think that's the future. So they won't get it, but the parents will.
So it's the intergenerational insurance conversation.
And the other thing I would really like to see, that's just on the board, is where the insurance companies, where insurance specialists, works everywhere else in the world, go back to being under the insurer.
Okay, can you expand on that a little bit?
Well, it's just, if you were looking at in Asia or in the United States, there's just the old National Mutual A&P models, where actually they actually train the advisors and they actually have them there and they're selling a sole product.
Returning to the agency style system,
Absolutely.
Is that certainly possible?
Because I think
today's regulatory reforms that are in
because I think that will make this be a sliced out part for the insurance specialist. And I think that's the thing. A lot of people say, oh, I'm going holistic now because I just can't concentrate on insurance. Well, there's a lot of advisors or people who, the next generation, are very happy to just be an insurance specialist. So why don't we try and help that? If we're going to be innovative, why don't we think of what's worked in the past?
Brilliant. Thank you very much,
No
Mark. In a conversation, it's a blue sky and there are no wrong answers. So thank you for that and thank you for your contribution. Catherine.
So we spoke at a previous roundtable and you asked me about my view of the future, and it really hasn't changed. I actually think that despite the challenge that we've had, the risk industry itself is actually looking for a very bright future. We've been through so many pain points, but I think more than ever we've got the light at the end of the tunnel situation now. So I think we are moving towards the end of the cycle of regulation intervention, and so that we're going to start to see simplification, more certainty in that space. I think that will allow more advisors to start to re-enter the risk space. And I think we will see more people starting to offer that. That also allows us to have an environment where insurers are able to start investing in their tech, to start looking at innovating products. So I'm quite happy where the future is.
And over to you, Emma.
I'm trying to think of a nice soundbite to summarise my views. I don't have one actually. I'm kind of it's warm to think everyone's trying to think of different ways to fix things. I think there's a big problem, and I think everyone's identified the problem, which is, and it's not one problem; it's multiple things. I guess I'm just hopeful that the answers or the solutions are bold and they're not tweaks, and it happens in multiple areas. And I think that'll be the next 5 years where a lot of different things are going to change, and that's pretty exciting, I hope.
So you're going to stand up and be part of those bold solutions, Ilan, with your advocacy of different types of products?
I would hope so, yeah.
Right, well, thank you. Only time to tell. Amanda, thank you.
I think at the moment we've moved to a bit of a GoFundMe society. I think people are just terrified of insurance. They don't understand it, and getting back to where people are advised again and take out products rather than, oh my goodness, my life's over, GoFundMe page. So hopefully, advice will become to the forefront again.
Okay, thank you, Amanda, and to you, Ruth, thank you too.
I think we need to be bold. We are as a society living longer. Life expectancy has improved significantly over the last 20 years. And that's not just because we're all getting healthier, it's actually because of a number of things, but preventing disease occurring is improving. If I look at prostate cancer or any of the cancers, the survival rates are 98-99% in 5 years. So in our lifetime, hopefully we will see a range of cancer is a broad condition, but a range of conditions that are cured. And so therefore we have to change with the times as well. The concept of insurance as applying an age factor, I think needs a reimagined into a longevity factor. So why do people live longer? And understanding longevity risk. We talk about longevity in annuities, but think about longevity in ourselves, and what are the factors that drive some people to live with chronic illness possibly, but live well or not so well. And I think it is a science that is growing. The genomics of it, the genetics, we mapped the genetic profile 20 years ago, and we're still continuing with genomics, and essentially that is mapping our DNA so that we can cure, we can address chronic illness. So I think we need to be bold. I think life insurance needs to be looking at it at a longevity level, and I think that's where the value of the insurance will come through. Older age insurance, where we are with iExtend, we are at the pointy end where cancellation has brought that policyholder to us via the advisor. So we are seeing that you can look and assess people at an older age and give a more accurate, up-to-date assessment of that person with that policy.
Okay, and with that iExtend service proposition, that's entirely possible. Do you think, in terms of talking about longevity, that more mature age Australians or consumers can still have insurance cover per se along the lines outlined by Ilan when it comes to insuring effectively for the cost of for medical costs?
I think yes, we're an ageing society, and we're living with chronic illness. So whether it's reimbursement of medical requirements, but also the affordability as well. It's got to be affordable. So if we could stop being so fixated about the age of the applicant and more about the actual holistic person and what their circumstances are, I think life insurance or longevity insurance is the future.
Well, once again, only time will tell. As we turn to you, Dan, thank you, and any final comments you might have.
Look, I just have to echo Catherine's. Actually, we're really bullish about human-led advice, and financial advisors have gone through a really tough patch, but there's some really exciting stories of how well businesses are doing. So that's really exciting. I think the pain points that I've discussed, they kind of sit in the product design space rather than the advisors just keep moving with them. So that's and doing some great work with some pretty arduous processes. I guess that's probably what I would like to say. And I think as the industry has moved to professionals that are highly qualified, they've got significant requirements on them to make sure that their clients' worlds are improved by the advice that they deliver. I think the time is now right because you've removed some situations where there have been some questionable information and client circumstances coming out of previous sort of advice situations where people weren't as educated. But I think now product providers should look to lean on the professionals because they do know their clients so well. So when you look at estate planning, often accountants, lawyers will lean on an advisor for information because they know every element of the client. So I think there should be a little bit more lean on the professionals who know a lot about their clients, and perhaps that's a way of removing some of the grind and the processes that are required and every little asterisk and box ticked.
And trust, trust will
a professional should be trusted like a professional, I guess, is the point I'm trying to make there.
Again, we will see what the future holds.
That's right.
In the meantime, thank you very much, Danny. And turning to say thank you to you two.
Okay. Yes. Seeking to finish on a positive note, I think for advisors there are significant opportunity at this point in time. I believe we are seeing the pendulum swing back after a lot of change with regulation. But for the advisor that's clear on their market segment, knows their cost to run their business. There's boundless opportunity. I would say to the advisor that's not in the risk insurance space, investigate it, because what we're able to do with insurance, we change people's lives. We keep families in homes, we keep kids in schools, and I think sometimes we get bogged down in regulation, we get bogged down in product, and we forget about what insurance is all about, which at the end of the day is looking after people when they need it most.
Well said, thank you. So there's a certain level of optimism you have with regard to the future, Adam.
Sure, yes.
All right. Thank you very much for your time. And David, I guess you've heard a lot of different views and perspectives. Thanking you and iExtend for the opportunity of having the conversation today. Leave any final observations with you. Sure,
thank you. Look, I do want to echo your thoughts and Catherine's thoughts about the fact that it's a bright future. We were seeing it. I mean, from my perspective, I would always bet on humans' ability to be creative, innovative, and have ingenuity in what they do. And so I can see this happening, coming through. And Danny sort of mentioned how advisors are adapting and building, an environment for themselves where they can actually be more impactful. So I would definitely bet on that. I mean, from an iExtend perspective, we took a risk on to be bold, to be in this space, and I think. There's views around, the, let's call it innovation or disruption that we're creating, but we have to be bold to do that. And I think the industry now needs to be bold as well. So in designing what we do, we set down the path and work with, that Ruth mentioned, to digitise a lot of what we do to help advisors, to make it simpler for the advisors. We see the advisors as being an important part of our process. We can't do it without them. And so we want to make this as easy as we can for them. To Danny's point around trust and the cost of sale, that $5,000 being sort of the cost of a sale, this is where it's all about economics now. The industry itself, we've seen rise in premiums, we've discussed rise in level premiums, and I believe technology is at the heart of this. We spend a lot of time on developing the technology to hopefully enable the advisors, but I think the industry itself needs to innovate. What we see from our perspective, just looking at our pain point, we see a lot of inefficiency in the paperwork that's involved in doing what we do. COVID has actually proven that you don't need wet signatures. Now, we evolved in the last 2 years where we can actually digitise some of that, but it has to go beyond that. So back to the point about blockchain, what does blockchain do? You can trade cryptos, and that's wonderful for a lot of people, but the heart of that is a blockchain technology that proves title and simplifies the administrative process of who owns what and how easy it is to business. So if you can lower the cost for both the advisors and the insurance companies, that would then allow advisors to sell more, be comfortable that the administrative process is not burdensome for them, and they can then focus on their clients and the best interest of their clients. But from an insurer's perspective, if they can develop the right technology to streamline the administrative process that not only helps the client and their advisors, but it helps them reduce costs significantly, which would probably put downward pressure on premiums as well. And so as an ecosystem, you're now managing the premiums, the trust issue that Danny mentioned, and I guess the cost of advice and administering advice. And I think technology at the heart of this, and I think there's a massive investment to be bold to revolutionise that for the next 10 years. And the industry's fragmented. The insurance industry across the world is so fragmented, it's singular. If they can build a body, I mean, I'll go back to my time in investment banking. The ISDA, the International Swaps and Dealers Association framework to manage over-the-counter instruments, that was, I would say, revolutionary in the sense that it created a framework for people to deal in bespoke products. I think some sort of framework for the insurance industry where they can collaborate on what is a standard so that they can all have that one framework, and then within that they have the nuances of product design.
All right, so if I'm listening properly, it's not so much the answer necessarily lies in the sexy front end, but sometimes the back end that the consumer doesn't see, but which allows an opportunity, if you're bold, for greater collaboration, which can then in turn lead to greater trust within the sector and a greater delivery of a service, a product or service that will ultimately deliver what it's intended to do.
Absolutely.